for trading in the futures and options space, because while you may make windfall gains, you can also land up in deep losses because of the kind of leverage positions that you will be taking. Onto the markets then, and focus on the Nifty and what it's been doing today. Not a whole lot is what we can say right now, not too much of a cue that's coming out. So 5600 is still where we are. We've been playing around with this level and holding on to this level over the last two trading sessions as well. Again, there's not too much in activity, so very lackluster, so to speak, because we've still got precedence in the 5700 and the 5600 strike put and the 5700 strike call. But then again, if you take a look at the maximum concentration that takes place, at least on the lower side since the beginning of the trading series, it is at a level which is much lower than the current market price. So closer to about 5400, 5300. These are the strikes which has maximum OI concentration, which has been building up since last month into this month as well. But for the time being, and the recent activity clearly suggesting it's going to be very, very range bound. Bring on board Dr. C K Narayan and Mitesh Thakkar as well to take us through their strategies and talk about the markets in greater detail with us. Thanks a lot, gentlemen, for joining in. Dr. Narayan, range bound once again.
Yeah, range bound once again is actually right, and I think the market is making heavy weather of going up, that is for sure, and it is doing so because 5700, which we saw last time, was actually a 62% retracement, and therefore a fair amount of selling has emerged over there, and which is probably why it's not really moving up much. But on the other hand, we are not really having any selling because there is a lot of FI inflow. Every day we are seeing fairly positive numbers for the FIs, and I think that is what really is holding up the markets in terms of a trend. So, you're not really able to go up because you have hit sort of resistances, and you're not really going down because there is fund flow and liquidity. So I think clearly that is what makes for a range, and that is where we are caught, which is probably why you're seeing this increased amount of action in 5600 and 5700 strikes.
Dr. Narayan, yesterday and the day before that, we had spoken about the shorts triangle, and you've maintained that you want to hold on to those levels. It was a premium inflow of 150, right now probably 100 odd rupees. And you said yesterday also that you'll hold on to that strategy and maybe even initiate it yesterday. Yep. But right now, at this point in time, maybe as a little bit of a flavor play, would you add or, probably take maybe even a naked position on one of the calls?
Well, not exactly. I think, I would take a naked position, or a naked position in options is really recommended when you are seeing a directional play with some speed. Otherwise, naked positions are losers. So, for the moment, since the market is slow, particularly the Nifty is a bit slow, I think we should just retain and hold on to that short triangle. It was 150, 155 when we initiated it. I said add it at 145 also. Today it is trading at about 137, somewhere around that. I think we should hold on to it because if the market stays this way, in another, say, couple of days, it should be down to about 115.20, where we could then again think about trying to take some money off. So just hold on to the short triangle, do nothing else.
Hold on to the short triangle, do nothing else at this point in time. Naked positions not advisable unless and until you're seeing a swing in the market, so to speak, to give you a clear direction. Mitesh, come to you and your assessment of the market right now. We're still holding on to a good premium, at least on the Nifty. Anything that you're pulling out from your kitty this afternoon?
Well, I think I would like to revisit what we had spoken about a little earlier. I had mentioned that we should be trying and concentrating on let's say the banking sector stocks. The bank index has actually moved up, and we had earlier announced that we should be looking at a long position, a ratio spread, I remember, in State Bank. Now it looks like the banking sector rally is more or less complete, and I would actually want to take a sort of a pair trade in this particular the sector, because I don't believe it's truly bearish, but I see two of the stocks trading at two different levels. One is HDFC Bank, which if you see is actually trading near a high, and on the other hand you have Axis Bank, which is actually going down, or an ICICI Bank. So we don't want to be outright bullish or bearish within the sector on any stock, but I would say long HDFC Bank with a short in Axis Bank or an ICICI Bank, as you may prefer. I think this is what I would like to initiate as a trade, as a pair. I think Axis and ICICI could actually follow the bank index down, but in case we are wrong, HDFC Bank will be there to save us a little bit of money. So I'm actually advocating a pair trade here. People who are a little more bearish on the banking sector can forget about the HDFC Bank long trade and just take an Axis short or an ICICI Bank short. but I would prefer that we take it as a pair trade, long one and short one.
All right. Just for the benefit of our viewers, Dr. Narayan, the logic or the rationale for taking a pair trade, if you could just explain that.
See, a pair trade is one where you are not really sort of outright bullish or bearish, right? You have a little bit of a guarded view on that particular sector or the pair of stocks or pair of instruments which you choose. You're actually looking for, the ideal situation is you're looking for the two to go in two different directions. What you're long to go up and what you're short to go down. But most of the time that's not what happens, because the sector influence will act in a similar fashion on both the stocks. But the stock which is stronger will fall less and the stock which is weaker will fall a little more. So as a result of which, between the two you end up making some amount of money. This is not a very large payoff kind of trade, but it is a safer trade, because in both the cases you're not going to lose big money. You're not going to make big money, but you're not going to lose big. Here I find that at a time when the bank nifty is actually turning down, Axis is down already and ICICI Bank has been down already ahead of the index. So I feel that those two will fall more than HDFC Bank, which is trading near the high. So HDFC Bank will fall less. The long position in HDFC Bank is just to make sure that we don't go on the wrong track. So we sort of try and protect a leg of it. This is a kind of a hedge kind of strategy. One may even call it as a sort of an arbitrage strategy type, because the returns are low.
Alright, returns are low and so is the risk right now. So if you want to take a pair position, maybe look at going long in HDFC Bank, and on the other flip side, going short in Axis Bank or an ICICI Bank. For the more bearish trader, you can just ignore the long side of the story and probably just go short on an Axis Bank or an ICICI Bank. Mitesh, this leg of the FNO show and giving us their strategies as well. We'll take a short break.